In this presentation, we're going to record the payment of employees, the payroll, within our accounting system. Now, we're not going to be processing the payroll through the accounting system, through Xero, but rather we will be saying that we're having a third party do the payroll, and then we're going to take that information and enter it into our accounting system so that it will appear in our financial statements. In order to process payroll through the accounting software of Xero, you would need an add-on that would cost more. We're going to keep it here so we can just have the 30-day free trial and not need any add-ons with it. We might talk more about payroll at a separate time. Payroll is basically a topic in and of itself. So we may make a course, just on payroll to see the payroll integration for it. But for now, we just want to enter the payroll as if it's done by a third-party person per third-party payroll professional. All right, let's go with Xero. Here we are in our Get Great Guitars file. We're going to start off by opening up our reports. I'm going to go to let's just open up the trial balance. I'm going to go to the accounting dropdown and we're going to open up the trial balance for now. So that's going to show all of our accounts. And then I'm going to right click on the tab up top and we're going to be duplicating the tab up top. So we're going to have the trial balance on the right. We're going to be entering the data on the left. Now remember, if you were to process the payroll through the system here through Xero, you could then go down here and look into the payroll options, which would be an added feature typically, or that's what they most recommend by Gusto. So we're not going to do that. We're going to imagine we have payroll being processed by such like an ADP or a QuickBooks, payroll professionals that do nothing but payroll. Then we're going to have to take their information, put it into our system. Now, let's first think about the flowchart for payroll. Why is payroll complex in the first place? Why is it this, very difficult thing when it should be really easy? If it wasn't for like withholdings and whatnot and taxes and the government and everything, then payroll would be just like anything else, right? We would pay somebody and we would just like credit cash and decrease the cash, write a check to them, and the other side would be an expense. Very easy, no problem. However, we have withholdings, and in the United States, we have withholdings for federal and state. The federal withholdings are all we're going to concentrate on here, and they consist of the federal income tax for the employee, the Social Security, and the Medicare. So those in and of themselves can be a complication, and we need to break them out check by check and employee by employee and have the year-to-date information. So what would happen then is we'd have the time that we would have to enter, then we would pay the employees. When we pay the employees, we would have to process all this information and then take out the withholdings that would be a liability, and then we would later pay the liabilities to like the state and any other liabilities that would be involved. Now, if you were to see this, just take a look at the data input within QuickBooks here, just to get an idea of what the input forms would look like. In a similar fashion, right? The data input would be something like this. Now we'll go into Xero just so you could see it kind of in software. If we had our two employees here and we were to say, okay, let's look at Rebecca's employee information. I have to check it off. And then we'd have to process the payroll. And if it was all set up in the system, it might look something like this, right? We'd have the hourly pay and then the rate up top, let's say 8, and that would calculate the gross amount. Then we'd have to take out Medicare, which isn't included, the federal withholding, the Social Security, and Medicare, and then we'd have our portion of the Social Security, Medicare, and then any other of our payroll taxes. So I won't get into more detail with that, but just note it could get a little bit confusing, and we have to basically give the payroll stub to them as well. So payroll's not something you really want to mess around with. You want some kind of system to help you out, the software to help you out, or to have a third-party payroll professional. Again, you might want to ask your a CPA firm for independent decision without considering them to process payroll, just so that they can give you advice on the best thing to do with the payroll. So we're going to imagine it's done by a third party. Let's do a quick calculation of what it would look like if it was done by a third party. What might look like? So we're going to say we have these two employees, and we're going to get the register from the payroll professional. So the idea, what we want to say is, hey, the payroll professional, Paychex, ADP, whoever who's doing our payroll, you guys have the detailed information. All we want on our books is to have that summary information so we could put it into our books and reconcile the bank account. So what would that look like? They're going to have to give us some information. Let's go through the report, a very simplified report of it, just so we get an idea of what these reports might look like, so then we could think about, why they have the detailed information and what information we need on our financial statement side and what information we might need to give to the employees to feed to them for the information they need. So we have just 2 employees here. So we only got the 2 employees. Let's say we pay the first one salary, which comes out to 4583.33, which I believe is $50,000 a year. So if I pulled out the trusty calculator here, it would be $55,000 a year, I believe, divided by 12 if we paid them monthly. But I don't want the rounding, so I'm just going to hard code the number. I'm not going to put the formula in there. I don't want it to be 0.333. I just want 33 cents. All right, and then so then we're going to say the Social Security, this is how it would typically be calculated. This would be the gross pay they would get if they were paid monthly. Social Security usually calculated as gross pay. This is, there's some differences if they're over a certain amount or whatnot. I'm not going to get into that, but I'm going to say the gross pay times 0.062. I think that's the current rate, 6.2%. So then we would take from them that amount. Now, for whatever reason, our practice problem shows something slightly different than that. So I'm just going to take out what's in the practice problem, which is 258. Point is, that's a flat tax that would be coming out in theory from the wages of the employee. And why do I say in theory? Because obviously in practice, it'll affect how much they earn and whatnot. The tax affects everything. You can't just, so in any case, but in theory, that's their gross pay and that's what they paid out of their gross pay. And then we're going to say then the Medicare is usually a kind of a flat tax too. It's going to be this times 0.0145, I believe is the current rate, 1.45 or it's going to be the 1.45% or 0.0145, and for whatever reason our practice problem cuts off the pennies at 66 cents, so we're going to use that, and that's a flat tax. And then the income tax, notice it's not our income tax. We're not talking about the income tax we have to pay as the business. We're talking about Adam's income tax that he'll have to pay on the 1040 at the end of the year. So we're trying to calculate what his income tax will be. We have no idea because there's way too many factors. It's a progressive tax system. This might not be their only income. So he has to tell us that information on a W-4, like marital status and earnings and other earnings and whatnot. And then we have to come up with some number based on that. So these two, we can have a good idea what those will be. This one, I have no idea. We have to base it on the W-4. Adam's got to tell us stuff, and then we got to withhold based on the W-4 information. So we're going to do that and just say that came out to $720. So these then are Adam's taxes. So note then the net pay, how much is Adam actually going to get paid? Adam's going to get this amount minus the Social Security, minus the Medicare, minus the income tax. This amount that was taken out of Adam's checks isn't ours. We had to take it out because we're required to in order to make Adam pay Adam's taxes. So these taxes that we are now holding on to this money, this is now money that we withheld, we did not pay to Adam, even though in theory Adam earned it. We withheld it and therefore have to pay it for Adam to the government, to the Social Security, Medicare, income tax. These are the federal taxes. Then we have to pay on top of that, these are the payroll taxes for the employer side. We have to match the Social Security and the Medicare. So these are taxes that we pay over and above. They didn't come out of the gross earnings. They were paid over and above the earnings. Same thing for Erica. We'd have to say, all right, Erica, let's say she earned 800. Social Security would normally be 800 times 0.062. 50, for some reason, we have 49 here. So we're going to use what's in our system. Medicare would typically be the 800 times 0.0145. And we are just using, for some reason, 11, cutting out the pennies. Income tax, we'd have to just go by the W-4, and so we need help with the income tax usually because it's a complex, progressive, weirdness, type of system. We just have to use the W-4 and then look at a table and get that number. Then we're going to say that we have the total earnings minus the Social Security, minus the Medicare, minus the income tax. This is what Erica would get. This is what we took from Erica. This is what Erica actually earned. Then we would be matching on our side the Social Security and the Medicare on our side of things. So then we'd have to report to the employees. If we pay them electronically, we still have to give them in some way, shape, or form, digitally or pay stub wise, their earnings, gross pay, as well as what was taken out of their pay, and then the net pay. And we have to do that check by check, period by period, and year to date information, which you could see with just 2 employees, that could get quite complex. Then we have to track basically our employer information. So you can imagine if I did this for an entire year, not just one pay period, especially if we paid weekly instead of monthly, this will start to compile to a lot of data that we would need to get into. So that's why it starts to get to something that specialists can use, or we need some type of software typically to track it and help us out with it, and then use that to make the quarterlies and the yearlies, the 941s quarterly and the 940s on a yearly basis. Now we could then say, okay, ADP or Paycheck do that, and then we're going to get the report, this information, and put it into our system. So all we know is that Paychecks took out of our system this amount, right? And we might want to put it into our system basically more on a cash basis, and then possibly do an adjusting entry for payroll basically at the end of the year as necessary. So now we're going to say, okay, how can we get into this into our system? This came out of our checking account. So I just want to get the payroll in our system. I don't need all the detail. I don't need each employee by their withholdings and the year-to-date withholdings and whatnot. I basically need to reconcile, so I need the check amounts, and I need to the proper expense accounts, right? So we could think about, well, let's think about this in terms of the accounts that are affected, the journal entry. We would have payroll expense would typically be affected, and that would be for, if I do this for Adam and Erica, I'm going to do it employee by employee so I can get down to the net check. So I could say, well, Adam had this amount for gross, and then we took out, and that's going to go to payroll liabilities, which is going to be a liability account for the negative sum. I'm going to put it as a negative number for a credit. Social Security, Medicare, federal income taxes. And then the gross, the amount that came out of the checking account is the net pay. So this is going to be checking account, all right? That came out of there. So now the debits equal the credits. That would be basically the journal entry. So, and then if we had Erica, same thing. We'd say, all right, the payroll expense would be the gross pay. And then the liabilities that we took out would be everything we took from Erica. That would be payroll liabilities. And then the difference is going to be the net check. So there we have that 800 and 800. You could think of it as one full check as a total. Like we could think of it as just one journal entry, which would be like the totals. Let's say we totaled this thing up. The sum of these two is that. The sum of the Social Security for the two employees is that. The sum of the Medicare is that. The sum of the federal income tax is that. And then you can calculate this the same way. This is like the gross pay for everybody, if they like as if they were one employee, minus the Social Security, minus the Medicare, minus the income tax. Then we had to match the Social Security and the Medicare. So we can add them up this way, add them up that way, and they come out to the same amount. Add these two up, they come out to this here. So then we could think of the total as, here's the gross pay as if all of our employees were one, and here is the negative sum, Social Security, Medicare, and income taxes for all of them, and then the net kind of pay that we had to pay out all together. So there we have that. So we could just enter this one journal entry for basically the employee side of things. However, if we do that, it'll be harder for us to reconcile, because notice we entered not each individual check. Each individual check here, we entered the two checks as kind of a lump sum. So we might want to enter them one by one so we can reconcile more easily, or we might just want to note that they're all paychecks, and it'll be easier to reconcile. We might use a different payroll account possibly, which will make it easier possibly to make the reconciliation process as well. Also, if we add them across this way, of course, we get the 5383 here. Adding across this way, we get the 1214 here. Adding across this way, we get the 4169 here. Now we also have to pay the employer side of things, which I don't need to be breaking out between Adam and Erica, because we're not doing anything to the checking account here. So this journal entry I would just enter into the system as a lump sum. So I'm going to say, all right, we also have to pay, we haven't paid it yet, but we're also going to have to pay the employer taxes. So that's going to be payroll, and we might put payroll tax expense. We might break it out into a separate payroll tax expense, which would be the sum of these items. And that's going to be going into the payroll liability. Same credit account of the payroll liabilities. No cash is affected, So I don't have to worry about how it's going to affect the checking account or that reconciliation process. We'll be paying these at a later time when we'll actually write the check, and then we'll enter the check amount for them. So we want to go over this kind of little detail information to put this together so that we can now take this information and put it into the system, into our accounting system within Xero. Because if you get a report and you use a third-party payroll, you'll get something kind of like this, right? You'll get something kind of like this, but it'll probably be like pages long, even if it's processing just one payroll period or something like that. You may want to enter it in payroll by payroll period. You could enter it in more periodically, like quarterly or monthly or something like that. But you're going to get reports that can be overwhelming. And what you really need to do then is think about, all right, what kind of stuff do I need to have the payroll company do? Which, again, would be all this kind of stuff, the stuff that goes to the employee, the detailed stuff, where you're going to say, hey, give that to the employees. They're going to have the paychecks go to the employees if they have need all the detail that they need to report on the schedules and whatnot. That's breaking everything out by employee and breaking it out by check and year to date information. That all that detail, you can then go to these reports and depend possibly on a third party for that. What then we need to enter is be able to take these complex schedules in some way, and either work with the third party system to help integrate that into our system, or to take that and put it into our system, as we'll do next time, with kind of a general journal entry, which again we can do with just basically one journal entry per period or something like that, per payroll period, or even possibly per month or per quarter. If we want to do that, the only thing we got to worry about when we do that is whether or not being able to reconcile these checks, right? These checks are going to have to be taken out of our bank. We want to be able to reconcile to that check. And if we set up a separate payroll account, we might be able to do that and still just enter it in our system as a lump sum to get our kind of accounts right without needing all that kind of detailed information. Or, as we'll do next time, we can enter them each in just kind of check by check, and we'll enter them in with basically a journal entry check by check. But again, if the client comes to us or an employee comes to us and asks about a payroll stub or anything like that, we should be able to then jump over to the more detailed information that would be in paycheck. So next time, we're going to be entering this information in. We'll enter this information, check, journal entry here, and then we'll enter basically this information for the payroll the payroll taxes.